When people think about investing, they tend to think about the stock market, maybe real estate, or index funds, gold, Bitcoin, etc. All of those things are part of investing. But it kind of misses the forest for the trees. When you think about investing, you really should break it down into three separate, yet equal components. I like to think of it as the three keys to investing success. We'll talk about that next on BTP Fusion. What's up, everyone? You're watching BTP Fusion. I'm your affable, inspirational host, Derek West. Here on BTP Fusion, it's our personal goal to inspire you to take action to improve your personal finances and business using the power of technology. If this is your first time here, stay tuned. It'll be great. If you're coming back, welcome back. You know how we do it here. Let's dive right in. So, investing. If you're just starting out and really geared up to take action, there's so many avenues that you can go down. Do you want to invest in real estate? Do you want to invest in Bitcoin? Do you want to invest in physical assets like gold, silver, etc.? It can be a little daunting for the average Joe to really pick up and get involved with an investing instrument. There's so much out there, and it just seems to be going up and up. And you just want to get a piece of the action. Unfortunately, the breadth of things you could get into is just so vast that I personally find, for a lot of people, it just leads to analysis paralysis. You end up studying different instrument vehicles for ages and never really pulling the trigger on any one investment. But you end up being able to talk your head off about said investment type. It's kind of that way with me in real estate, for example. Several years ago, almost a decade now actually, I really first started thinking about real estate in any meaningful kind of way. I started to research areas that would be profitable to invest in, started to research individual homes and kind of look for the right deal that would catapult me to real estate investment success. Unfortunately, I got into a little bit of analysis paralysis, always searching for the perfect deal that would have had the perfect cap rate and had a ton of cash flow. Unfortunately for me, my timing for that model was slightly off. I should have started right around the 2008-2009 timeframe to really get a proper cash flowing property. At that time, as I'm sure you know, it was the bottom of the market. So prices for housing were at their floor and rents were relatively around the same price. And in some areas, rents were rising as more people were looking to rent than to own. At that time, you could have gotten a single family or a duplex or a triplex or even a quadplex, and you could have had it cash flow easily, particularly if you got in on some kind of distress sale, foreclosure, things like that. Now, don't get me wrong, you can still get a good property that will cash flow well, but not as well as if you had been looking diligently back then. And that's really kind of my point. If I had been more geared towards taking action and not just studying about the different possibilities and ways to make extra cash, I would be in a much better position now. Let that be a lesson to you. It's better to take action than to just analyze. The fact is, if you let analysis paralysis get in your way, you'll never get started. If you don't even know where to begin, you'll just jump from one shiny investment object to the next, wasting a little bit of time and money here and a little bit there, never really getting into an investment groove where you truly grow. And if you don't form a plan, you won't know where to begin. Like I said a little bit earlier, you need to break up your investing strategy into three separate, yet equal, components to truly get the most out of your time and money. Let's start off with the first and foundational component, personal investment. This one seems kind of hokey and corny, and I can hear eyes rolling all over the internet and YouTube land. But seriously, investing in yourself is one of the key ways to increase your income and potentially to invest even more deeply. Think about it for a moment. If you don't have the skill, you'll end up being stuck with menial jobs that barely pay above the minimum wage. These jobs will involve mostly no or low skill or personal challenge to yourself. In other words, snooze central. These are jobs that you wish you weren't at and are basically doing just because you're getting a paycheck. But even if you're more entrepreneurially focused, if you don't acquire a skill or skills, you really can't start a business. Barbers, hairdressers, chefs, those are all businesses that you can start, but that you need to acquire a skill for first. Even driving Uber or Lyft requires you to have a driver's license, i.e. be so skilled in driving that your local jurisdiction grants you a license to operate a motor vehicle. And also, the skill to not be a felon. An investment in yourself in both time and money is needed to acquire skills. First, you need to educate yourself on what skills you actually want to acquire to maximize your potential. Figure out what you're interested in, and then try and find an intersection between that and what pays good money. For example, if you really like drawing and digital art, then become skilled in Photoshop and other digital art tools. If you're a fan of poetry, then you're probably really skilled with words and using them to move the emotions of people. If that's the case, you really need to learn how to write copy. Both of those skills pay big money if you're an employee and can be the basis of a solid business if you're an entrepreneur. But you need to figure out what motivates you, what you like to do, and try and marry it with a real-world skill that can pay dividends. When you figure that out, learn as much on it as you can. Now, you can go to college to do this. You may or may not know I'm not a huge fan of college, but nevertheless, if you know what you want to study, then going to college can be a good way to increase your earning potential. If you don't know what you want to do, don't waste a nickel on college. It's just that simple. Even if you do know what you want to do, it's possible to be employable without a college degree. For example, you could take some classes on Udemy, Skillshare, or places like that. Learn as much about a subject that you're interested in as you can. At that point, hire yourself out to a gig site like Skillshare. You won't be able to charge a ton of money at first. But then again, let's be real, you don't have a ton of experience. But once you get some projects under your belt and really begin to pick up momentum, you begin to charge a mint as long as you're delivering value. And if you're a native English speaker, you'll stand out immediately on Fiverr. Trust me, I use Fiverr a lot. Not a lot of people speak English natively there. So if you do, you'll stand out. So if you do that, you'll have some cash. It's time to start working on the second component, investment instruments. Once you start getting cash rolling in and you can support yourself and your lifestyle, then you take the money that you have left over and use it wisely. The first thing that everyone does when they get money and they're using it wisely is they put it into a banking account, either checkings or savings. And that's a fine thing to do when you're first starting out. A good rule of thumb is that you should always have just a little bit more than your average monthly spending in your checking or savings account to ensure you don't incur any bank fees, late fees, etc. But true investing is going to require more than that. A lot of people don't realize it, but a free checking account is really a cost to you. A lot of folks don't take into account inflation, which at this point has been averaging about 2% every year for the past couple of years. And yeah, I know there are conspiracy theories out there that say that inflation was really 200%, but that the lizard people are eating all the extra inventory. But right now, we'll stick with official numbers. Speaking of eating things, inflation will eat into whatever money you have in a checking account, as well as a savings account that doesn't at least beat the official inflation rate. Once people start to figure this out, that's when they begin to put their money into instruments that can grow above the rate of inflation. There are several of them out there. I have a couple of videos talking about quite a few of them. Be sure to like and subscribe and click that notification bell so you don't miss out when I publish more. And also check them out on my channel, links in the description. If you're a beginner, there are a couple of really good options to go to. That is index funds and ETFs. If you really want a place to put your money, set it and forget it as it were, then an index fund is the place to go. There are certain strategies around investing in index funds as well. Again, I talked about this in another video, link in the description. But for now, just put your money someplace where it will beat the rate of inflation over the long term. A place that requires very little managing on your part. If you want to be more actively part of your investments, and you're still a beginner, then the place to go is ETFs. ETFs, or exchange traded funds, trade on exchanges just like stocks. Therefore, the acronym exchange traded funds, and allow you to experience the highs and lows of daily trading, just like someone who owns stocks. Once you get your feet wet with that, then you may want to wade into investing actual individual stocks. Stocks obviously trade on exchanges and can be very volatile for seemingly random reasons. There is data behind each move, however, and with a little study and steely-eyed constitution, you can master even that. That said, it will take time and learning on your part. That's part of the first component of investing that we talked about earlier. If that's your bag, then go for it. Once you have a feel for stocks, you can then get into any number of other investment instruments. You can go from options to futures to forex to CDOs, etc. The possibilities are endless. But just keep in mind though, the more exotic the investment instrument, the deeper your knowledge and skill level should be. Do not, and I repeat myself vigorously, do not get into these investment instruments if you have a cursory understanding of any of them. If you do that, you stand to lose a ton of money, and it's just not worth it when there's easy options out there for taking. But that leaves us with the final component, true growth. True growth investments are investments in businesses and opportunities that could really propel your investment portfolio into the stratosphere. A classic example of this is real estate. If you do your homework, owning real estate can transform you from an average Joe into a millionaire, maybe even a billionaire. But true growth is not just real estate per se. I know that's a favorite topic here in the YouTubes, because frankly, it's the easiest to understand and undertake for the average Joe. But true growth can include things like owning franchises. Also, investing in franchises. You don't have to own and operate the franchise yourself. You could buy a stake in a franchise with a partner, and they operate the business and you just collect the cash. That said, it can also include starting your own business. We talked about this a tad bit earlier, but maybe while you were learning and picking up a skill, you noticed an inefficiency in some sort of business model that you were studying. You could start a business to fill that niche, and if it succeeds, which is frankly quite a big if, then you could truly profit. But even setting those things aside, you could also start an online business. Some types of online businesses that have become popular lately include a Shopify, BigCommerce, or Etsy store. They also include starting a YouTube channel, Twitch stream, or Instagram page, growing a following, then monetizing it. There are many models out there for success. You just have to be aware of them and be ready to capitalize on them when the time is right. Remember, a goal without a plan is a wish. A goal with a plan but no action is a wish list. Be sure to click the like button if you got value out of this video, and click the subscribe and notification bell so you don't miss it when we drop brand new videos. Take it easy, everybody. We'll catch you next time. Peace.